Hello everyone, this is Marshall Gittler on behalf of Claws and Horns. I'm going to discuss the main issues facing the FX market in the coming week beginning 10th of July. The major issue remains the same. Is the era of ultra-loose monetary policy coming to an end? Central banks all over the world have been giving hints that they're now confident about the economy and want to normalize their extraordinary monetary policies. That means stopping their large-scale purchases of bonds and raising interest rates, which in almost all cases are at record lows. The change in tone has hit bond markets hard. You can see here how yields have moved higher in bond markets around the world. This graph also explains a lot about why the euro has been strengthening against the dollar. Note how much more German yields have moved up compared to US yields. Note too how little Japanese yields have moved up. That's one reason why the yen has been the weakest major currency over the last week. The Bank of Japan is the one central bank that not only isn't yet discussing an exit strategy, but on the contrary has pledged to cap bond yields. It intervened in the bond market on Friday to keep yields from rising. That monetary policy divergence between Japan and the rest of the developed nations suggests to me that the yen is entering into a period of sustained weakness. The monetary policy normalization thesis will be tested on Wednesday when the Bank of Canada is scheduled to meet. The change in the market's outlook for this meeting has been stunning. As you can see from the graph, at first the market basically thought there was no chance of a rate hike this month. Then, on 12 June, Senior Deputy Governor Carolyn Wilkins gave a speech in which she totally changed market perceptions, and speculation about a near-term rate hike increased. Governor Polos reinforced that idea when he spoke on 28 June, and as you can see, the odds of a rate hike in July shot up from about 40% to 70% immediately. Now, the market's pretty much assuming that they'll hike on Wednesday, although, to be honest, 8 of the 24 economists surveyed on Bloomberg say probably no. Personally, I don't think they'll hike either. I think the Bank of Canada is likely to upgrade its economic forecasts and change its forward guidance to become more hawkish, but I don't think there's any urgency for them to hike. In any event, I think the risk is asymmetrical. If they do move, the Canadian dollar is unlikely to strengthen very much, but if they don't, then it's likely to weaken sharply. The other main focus during the week will be Fed Chair Yellen's semi-annual testimony to Congress. She speaks to the House Banking Financial Services Committee on Wednesday and the Senate Banking Committee on Thursday. For the first time that I know of, the Fed's already released the text of her report, which usually doesn't come out until the first day she testifies. So the basic outline of what she's likely to say is already known. Usually, though, the statement is just a rehash of the last FOMC statement. The key will be, as always, the Q&A session afterwards. Congressmen are likely to grill her on the Fed's view on inflation, when the Fed might start trimming its balance sheet, and how she sees the economy's progress. I suspect that she will focus on the Fed's recent theme that financial conditions are unusually loose despite several rate hikes, which suggests that the Fed has plenty of room to hike further. The dollar could strengthen as a result of her testimony. Yellen's testimony comes a few days before the June CPI is released on Friday. It's expected to show headline inflation actually slowing a bit, while core inflation is forecast to remain at the same year-on-year rate. That, on the other hand, could be negative for the dollar, depending, of course, on how Yellen has spun things. The other major U.S. indicator out during the week is retail sales, also on Friday. The headline figure is forecast to be lower than recent activity, but excluding autos and gasoline sales, is forecast to be at around the recent level. That should be reassuring to the market, but I expect that the CPI will be more important at the end of the day. This is Marshall Gittler for Claws and Horns, bringing you the outlook for the week beginning 10th of July. Good luck in your trading.